What's going on, guys? Welcome to the Daily Technicals live session. This is for August 1st, 2018, Wednesday, the same day as FOMC. So this is, as most of you guys know, a day that I highly recommend to stay away from the marketplace. Don't go in. Don't take any trades. Typically I look to exit any trades that I'm in at the very latest New York session Wednesday of FOMC, which would have been this morning. So I haven't taken any trades this week, and I don't recommend anyone taking any trades this week. We've got a lot of consolidation going on. There's nothing really to take action on within the markets. So with all that being said, let's just go ahead and jump right into it. So looking at the dollar index on the daily time frame, I'll throw my drawings on in just a second, just to keep the charts pretty clear. I want to look at a daily. But if we look here, yesterday we did form this higher low, so it'll be interesting to see if dollar index does want to continue higher from here and take out this high here, which comes in at 94.91, which is the high from July 27th. So I believe that was Friday. This is Thursday, Wednesday. Yeah, I don't know 100% what day this was. Let me just look at my calendar and see. Yeah, the 27th was Friday. So if we get back above this high at 94.91, then I'm pretty confident that they're going to run this high at 95.65. But for example, if we do not come above this high here and we make a lower high, then I think we're going to run the liquidity below the market, ultimately below the 93.70 that we've been mentioning for a while now, and then this 93.20 level here, because we've got these equal lows. So we've got a lot of liquidity built up below these lows here, where a lot of buyers stepped into this market and their stop losses are resting here, and then the people who trail their stop losses, it's resting underneath here. So my personal opinion, I would like to see them trade lower. There are no indications of that so far, so that's why I'm not trading or anything like that. We still have NFP Friday. Today started a new month. There's just so much uncertainty that I just don't recommend trading right now at this current time that we're in. So if we drop down to a 1 hour and we put our markups on here, we can see that this ICT bearish order block here that we had marked out, once they got above that, this formed an ICT bullish order block, and then the market pushed higher. We came back down during London. We retested this ICT bullish order block that was formed after we broke structure above this high here. So just for your study, which is what I recommend you guys be focusing majority of on this week, is studying. So what I recommend going back into previous price action, but if you're looking at this week, notice how these ICT order blocks act as old resistance turned support. So we've got potential level of resistance here. These two up candles should act as resistance when we trade into it. It doesn't. Once it doesn't, then we know, okay, that could be a potential level of support. We're above it here. The market trades down, finds support, trades higher. We don't have to get in the move here. Once the bullish candles here get above these down candles, we know, okay, this should hold as support, right? Because it's previous resistance turns support now. So look at what the market does. We get a spike down. Where do they spike into? These two down candles, which is what? Support in the form of an ICT bullish order block on a 1 hour basis. Okay? So if you look at this on a 1 hour basis, look at what we've got so far, right? We've got a low, a high, higher low, higher high, higher low, higher high, higher low. Okay, so there's no indication so far for me that it wants to go lower, because we've got bullish price action overall. So we have to assume at this point in time that we're going to run the liquidity at 94.90. Okay, once we get above this level or we reject and trade lower from this level, then we can assume, okay, what they're going to do next is either going to continue higher above this for 95.65, or they're going to reject and trade lower for 93.70 and then 93.20. All right. So there really isn't much else to talk about, and you're going to see this common theme, repeating amongst all the majors, because we really do not have anything going on. I mean, it's all just in massive consolidation. So looking at this, we're not moving, right? We're just staying in between this small little range, right? Between this high and this low, or between this high here and this low, whatever you want to look at. This is the range that we're trading within. The market is unable to get lower than this low and unable to get above this high. Now, based off of what we have so far in current price action, it looks like they want to continue higher. Okay, but we don't really know what's going to happen until we get to this level. All right, 94.90 to 95 big figure will tell us, are they going to use this as resistance? Okay, so this level at 95 big figure is a daily resistance level. It's a daily bearish order block. All right, and we've also got a high here, so we'd clear out liquidity and we would hit a daily resistance level. Okay, so that should provide us with a selling opportunity. Not that we're going to go trade, but we should see selling in the marketplace and see the market trade lower. If that's the case, then we can go into next week assuming that they're going to be running the liquidity below the market, which should promote higher prices in foreign currency if that's the case. Now, if we get above 95 big figure and we just continue trading higher, then we have to move back and switch our idea to selling for foreign currency, right? But right now, it's hard to get a clear indication of what we're going to get. So that's why we're just going to sit out and we're going to wait for them to prove to us what they're going to do. It's much easier when you just, you practice your patience, you let the market tell you what they're going to do first. After they do that, then you react to that. Okay. So there's really nothing else to talk about with dollar index. We just have to see what we get from there. Let's take off our drawing tools with this one, and we'll start with a daily again. Now just look at this price action, right? We really do not have anything clear, right? So you guys that are in here live, comment in the chat box and tell me what this portion of price action right here is. We've talked about it already numerous times in this live session, but what is this portion of price action? What do I call this? When the market's not moving, what do we call that type of movement, right? So since we know that we don't have any clear indication of where the market's going to go, whether that be higher or whether that be lower, we have to wait, right? So we know there's liquidity above the market at 1840, and we know there's liquidity below the market at 15 big figure. Until we get a move in one of those directions, we can't act on anything. Okay? So the market isn't doing anything. We're in a consolidation. Okay? So let's drop down to an hourly with this one. We'll put our drawing tools on here. And we marked out this ICT bullish order block here. We were expecting them to find support, but we did not do that yet. So it does look like this wants to just continue trading lower. Inversely of the dollar index, looking like it potentially wants to trade higher. Now we cannot trust this quadruple top here. All these relative equal highs. We do expect the market to come back and run this liquidity above here. It doesn't have to do it this week though, right? So the market can just basically do nothing and consolidate and trade sideways for the rest of the week, and then present us with a clearer opportunity Monday, Tuesday, early next week. If we can get some selling in the dollar index, we could target these highs here at 17.50 for euro dollar, and depending on where we're at, that should provide us a decent little trade opportunity, because I think before going lower, at least to the 1.15 big figure level, that they're going to want to run all this liquidity above here. If they're going to take it lower, they're not going to let all these people that are that sold the market at all these highs, they're not going to let them stay on board. So I think that could be a quick move, and this could happen NFP on Friday, right? So just think about what we've done so far. Dollar index for the whole week has primarily traded higher. So they could be, just letting the market gradually trade higher all week. Friday comes and then they sink it, allowing foreign currency to, push up higher. which could give euro dollar the strength to push up above that 1750 big figure level. So I'm interested to see that. If we look at euro dollar to get a little bit of a directional bias, we formed this high and then we came back up and we formed a lower high here. So, you know, once they found support at this ICT bullish order block, I was expecting a higher high to form, which would have indicated further strength in euro dollar. Since that did not happen though, and this, you know, formed a lower high and we're basically back at this ICT bullish order block, it's either gonna find support and trade higher from here and go back and make a higher high above 89.50, or we're just gonna stick back in this consolidation here that we've been in, you know, basically for over a year now. Okay, so until we get a real, you know, if we start getting higher highs in this pair, then, you know, at that point we can obviously tell that euro dollar is likely going to trade higher and go take out that all those, you know, those 4 equal highs that we see back here on the hourly time frame right here. Okay, so ideally I'd like to see them clear this up before the end of the week, right? So if they can get back above here before the end of the week and show us some strength and dollar show us some weakness, I'd really like to go into next week being able to buy foreign currency. So yeah, we'll see what happens with that. Let's take a look at GBP USD now. We'll start with the daily again, and we'll take off our drawing tools. Now this one, if anything, does look like it's going to go lower versus euro dollar at the moment, because if you look at the price action, we have high, low, lower high, lower low, lower high. So I do expect, or I am anticipating, a potential run on this 29.65 liquidity here, which is coming off of this daily ICT bullish order block back here that happened on September 4th of 2017. So I mean, again, just like all the other pairs, like look at it on a daily time frame. Look at this week's candles: small body, small body, small body, small body, small body. You know, so there's nothing for us to do in here. You know, so we can't be stressed out trying to look for trades every day or anything like that. There's nothing for us to operate on. And the best way to keep money is to, you know, not, you know, put it at risk when it doesn't need to be at risk in a you know, very low probability scenario, because that's what we have this week, right? It's a very low probability scenario, and you guys know that I never like to take part in any trades unless it's like a high probability scenario, meaning, you know, I want to see a minimum of 3 to 1 on every single trade I take. So, you know, what does that mean? I'm looking to make $3 for every $1 that I risk. You know, so if I'm risking, you know, say, you know, $300, I'm looking to make $900, right? If I'm risking, you know, $30, I'm looking to make $90. So I'm always looking for 3 times the amount that I'm risking. Now, with the, you know, with the current market conditions, this consolidation that we're in, we don't have that. You know, there's no if anything, our opportunities are, you know, so low that we're talking about, you know, having to risk 50 to 100 pips in terms of a stop loss for like 20, maybe 30 pips. So we're risking more than our reward, and that's never a type of market environment that I want to be involved in, and you know, one that I would never recommend anyone to trade, because it's that's not how you become profitable. So I'm here to teach you guys how to become, you know, efficient in your trading and, you know, profitable over time, and you're not going to get to that point by, you know, number one, not listening and trading this week. So if you've done that already, you know, just understand that you and if you did that and you took a win this week, just chalk it up as luck and do not trade anymore for the week. If you've taken a loss, you have to learn your lesson from it, right? So you have to remember, okay, why did I take this loss? Well, I traded during a week when the market is, you know, very unpredictable. Okay, so then, you know, you journal all these things, you write it down, and you don't continue to make that mistake, right? Otherwise, then, you know, you're never going to improve if you're just continuing to make the same mistake. So if you did take a trade this week and you did take a loss, journal it. Journal why you made the mistake. You know, were you feeling like you had to make money, so you went in and you know, took a trade even on a week that you knew you shouldn't have? whatever the the scenario is, write it down, journal it. That way, next time an FOMC or an NFP comes around and you get that urge to trade, you go back and you look at that journal entry and you say, oh yeah, last time I did this, I blew my account. Last time I did this, I lost money. Last time I did this, I made a little bit of money, but Jeffrey said that was just luck because we can't trust the market during these weeks. Write that stuff down, and then when you get that urge, you have to go back to that, and this is how you create that discipline, and you hold yourself accountable. So in terms of GBP USD, I mean, like all the other pairs, there's not really much to talk about. So these dailies technicals videos are very dull and boring right now, I know, but there's just nothing going on in the markets for us to really talk about. So what do I expect with this? If we trade lower, I'd like to see them find support at this high here, which is what, 1.3050, so 30.50, and let's see, this order block comes in at 30.40, so anywhere from 1.3050 down to 1.3040, I'd like to see some level of support come in around there, and then I would like to see the market start trading higher from this point, because we've got relatively equal highs here at the 32, what is that, 3220. 3210. So 3210, we've got relative equal highs here, and if we can find some support and get bullish price action off this level, we'd be looking at a potential 173 pip target, which would be nice. And just to kind of outline like how we would look to do that, right? We would look to, this would be a little bit of a longer term position, not months or anything like that, but may take about a week or a little longer than a week to actually unfold. But this is like something that I would look to take a trade on, right? So if we can trade down into this blue box area, which is 1.3050 to 1.3040, I would place my stop loss below this, can't speak right now, below this low initially, which would be the 2960 level, because if they're going to find support here, they should not come below these lows, and they should definitely respect this low here. Okay, so I'm imagining this as a longer term low if they're going to find support at this level. So I would be risking 88 pips for a target of 164 pips, right? So right there, you guys can see that's 2 to 1. So I'd be making $2 for every $1 I risk, right? So 88 pips risk, 164 potential profit. Okay, so that's the type of trades that I look for, right? But we have to get down to these levels. What is there to work with in here in this consolidation? Nothing. I can say I bought it here, targeted this high, and put my stop loss below that low. I could do that, but I'm doing all this, with NFP coming up. Today's the first day of a new month. Like, should I really be doing that? And that's kind of how I'm looking at it. Why would I do that at this point? I need the market to either, because if we start trading up and making higher highs, no problem. I have no issue with getting on board at a higher price once we've proven to me that we're going to go for these equal highs. But while we're in this consolidation, I have no proof whether they're going to go higher or whether they're going to go lower. So until they give me one of those scenarios, then I'll act on it. Right? So I'm just going to go ahead and delete this now, but I wanted to show you guys, that's how I frame my trades, right? So if we can come down to this level, we show bullish price action, meaning they show me higher highs and higher lows. At that point, I can buy it, okay? And then my stop loss can go here. So I'm risking 88 pips, again, for a 164 pip target, okay? So that would be that specific trade, but that's the things that we're looking for, okay? We're not looking to just trade at any point in time. We need the market to prove to us that it's going to hold that level of support. So just to talk about one last thing real quick, if we draw our fib from this low to this high, you can also see the 61.8 and the 70.5 retracement levels. That level of support that we're looking for is pretty much right in the middle of those levels. So while we already expect support at the 61.8 and the 70.5 levels, the fact that we have this old high and ICT bullish order block within that level, that's why I'm expecting support there. Okay, and we've built up a lot of liquidity below the market, so if they take it lower, they're going to trap everybody thinking that the market's going to continue lower when they're more than likely just going to come here, find support, and then start trading higher. Okay, so that's what I'm going to be expecting with this. But again, we have to let the market prove to us first that that's what it's going to do, and then we can react based off of that. All right, so taking a look at dollar yen, this was nice to see. The high formed at 112.15. So I said if we get into that 112 to 112.20 level, we have to expect some level of resistance to come in the market and expect them to, maybe they don't trade lower and make a lower low, but we have to expect some form of resistance to come in. So, I have been saying all week, don't take any trades or anything like that. So this is just like, this was a study, for you guys to, mark up in your charts and look at on your own. But we have this maroon line here at 112.20, which is that ICT daily bearish order block. So I'm going to drop down to a 1 hour now. And you can see that we traded up 5 pips shy of that level, but I did mention 112. So this pretty much came up right to 112. So 112 to 112.20 were the levels that I was looking for the market to find some level of resistance. Okay, so market consolidated, made one last push here, traded lower, formed a lower high, broke lower here. Okay, so will they continue lower? They could, but again, we just have to let the market do its thing. Personally, this still looks like it may want to go higher. There's relatively equal highs here at the 113.20 level, but I would prefer to see weakness on dollar index, so that should mean weakness for dollar yen. That's why I'm not trading this week, right? I don't have a clear read right now. The market just isn't giving it to me. And if anybody is trading in these markets, I cannot stress to you that if they are, they're not a professional trader, or they have not been in this industry long enough to know what they're doing, because the reason the markets are consolidating is because the people with the real money aren't trading right now. When you have moves like this, big moves, then you have people with money in the market. When you have real slow consolidations, long drug out moves, you have no money that's in the market. They're just letting the market move sideways. All right, so the way I'm looking at this on an hourly basis, we have this consolidation, then we have this nice little run up, and they just retested that level here, so they could find support here and just continue trading higher. That would be just based off of traditional support and resistance. So that could potentially happen, and we see them trade higher from here. So just like, for example, a trading opportunity, again, don't take a trade, but a scenario and how you would study it would be, you can, say you bought it here, you would place your stop loss below this low back here, and you would be targeting these equal highs. Okay, so you're risking 76 pips for a 176 pip target. All right, so these are the things you want to study. So have this drawn on your, your chart, and then just let it play out. You don't have to actively trade. You can just let the market. You have this on here, and then if the market trades lower and comes lower than this price point, okay, I would have lost money on that. But you're not losing any real money. It's completely just paper trading. You're just letting the market unfold with something that you have outlined on the charts. And if the market does come up above here, then you're able to, give yourself a pat on the back and say, okay, I outlined a 176 pip move. That's a really good, that's a good accomplishment, right? So do these things. This is what I recommend, doing, especially weeks like this. We're not supposed to be trading. We're not trading. So we want to, really dive deep in our study, and we want to learn as much as we can when we're not actively participating in the markets. So that's really all I have for you guys today. If you have any questions, go ahead and send those through in the chat box. I'm going to go ahead and stop the recording. So just go ahead and send over any questions if you have them. I'll answer those, and then we'll wrap up for the day.